Hello, I'm Katrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey?
Hello, everyone. I want to welcome you today to How to Grow Your Wealth, starting today. It's never early enough to start, and it's never too late to start. So if you feel like you have not been paying close attention to growing your wealth, let's start today. So as you should be aware, every circumstance is different. And some things that I hear when I am working with clients is, well, my cousin said they did this, or, they got 10,000 back, and why am I only getting 900 back? So that's why it is important to understand it's going to really depend on your circumstance, what will work for you and your financial plan. So I am Katrina M. Craft. I'm an entrepreneur at heart, and I've been an entrepreneur in 2002. I really took the dive to become a full-time entrepreneur. I started working on the side. I had a side hustle. I know a lot of people started that way. I did have a side hustle doing accounting, and in 2002, I took the dive. I have a certified public accounting firm. Also, I have a craft entertainment CFO firm, which is different from my certified public accounting. That's working with the entertainment industry. But I particularly service professional service businesses, so dentists, doctors, attorneys, consultants, coaches, and I also work with the entertainment industry and real estate. So those are my specialties. One of the biggest problems in this country, can you guess what it is? It is the most small business owners and individuals need more knowledge about growing their wealth. So today we're going to talk about that. Have you ever had tax planning and advisory services done in the past? So not just the tax prep, we're really talking about planning and advising you for what you need to do to grow your wealth, grow your business, and grow your financial status. If you haven't, it's not too late, but we're going to talk about some of those things. This session is all about wealth and growing your wealth. So there are 7 income streams of millionaires that the IRS has stated. The first one is passive income. So in passive income, you can have interest, and that's one stream of income. So interest comes from a variety of sources. Most of us know that when you have a bank account or savings account, you may gain some type of interest. If you have loans to other people or to businesses, you can also gain interest. That is passive income. Dividend, that's the second stream of income that millionaires often have, are payments from investments and partnerships. A lot of people know about dividends, possibly from investing in the stock market. When you invest in the stock market, you purchase a piece of that company, and that company can pay you a dividend monthly, quarterly, or annually. But all stocks do not pay dividends. So you need to make sure when you're researching your stocks, and if you want dividends, you're looking for companies that will pay you dividends. And again, it can be monthly, quarterly, or annually. This is beneficial. If you're looking for dividends, qualified dividends, they are very beneficial because they are taxed as a long-term capital gains rate. So that long-term capital gains rate is a lower rate than your ordinary tax rate. When you're looking at your tax return, that's why it is important to understand the different streams of income, because all income is not taxed alike. If you have capital gains, that's one rate. And if you have your ordinary income from your business or from your W-2, that's another rate. Now let's go down to capital gains rate. When you earn from investments, when you're selling something, you would have a capital gain. So let's just talk about a rental property. When you sell that rental property, you will have a capital gain or a capital loss, depending on how your property has increased in value or decreased in value from the date that you initially purchased it. When you look at capital gains rate, it is a lower rate again than your ordinary tax rate that you would have when you were making money from your W-2 or your business. It is important to understand capital gains rate, especially when you're looking at real estate, because it may be beneficial for you to sell the property depending on what your gains are, but you also have to recapture depreciation. So I know that's very technical, but when you sell a property, not only you may have gains and losses, but you're also going to have to recapture some of the depreciation that you've had from owning the real estate. I do work with a lot of real estate investors. I'm a real estate investor. My husband and I have over 12 homes that we managed in 2 different states. And so I really like talking about real estate. I like real estate as something that you have in your portfolio as a way to build wealth. And one example would be, I'm looking at selling a property that I've had since 2005. And the house has gone up 3 times in value. So that's just one example of how real estate can really help you in your wealth accumulation. So I didn't know if
I have a question. I think that's very good and very interesting. So when you own real estate as a passive income business owner, explain to me, okay, first of all, I'm thinking that you'll have to have some type of company that maybe facilitates the process of getting the lease payments and that type of thing, especially if you have a conglomerate or a number of properties. So in terms of expenses, I guess I'd like to understand how you manage those expenses, and then I'd also like to understand the tax liability as far as that passive income, and in relation to maybe if I had a W-2 and I had direct income from an employer.
Okay, so let's start first with managing the property. Managing the property, we started actually with property managers because we didn't think that we had the knowledge or the education or skills to manage our own property. What we found is that was not true. We took some courses, and now I'm sure you know of someone that has a course. It's just making sure you get the right course to learn what's needed, because you need to know if you need to evict tenants, what's that process? How you can collect rents, how you can charge late fees. You need to understand, like, what do you look for when you're looking for a tenant? Because we look for 3 times income. We look for no evictions in the past. We need 2 months of pay stub. So there are certain things you need to know if you are managing, that you need to take some classes and just not jump in, learn from someone who could be a mentor, or if you do have a property manager that starts the process, you can maybe have them manage your first house, you learn the ropes from them, and then you manage the subsequent homes. That's really kind of what we did. The homes that are out of state, we have property managers, and a property manager is going to charge you to manage that house, usually 10%. If you have multiple houses, they may go down to 8%, but that's 10% of the rents that they're collecting, because they're managing the collection process from the tenants, they're managing the repairs, they're really looking at the property to make sure it's in good standing. And when we're have a property from out of town is just difficult for us because that's not our full-time business. We do both have full-time jobs. I have a business and my husband is a W-2 worker. So we don't have the opportunity and the time to go and manage houses that are out of state. But the ones that are here in Dallas, I'm in Dallas, we do manage all of our own homes. Regarding passive income, the good thing about real estate is that you have a phantom cost or expense that's called depreciation. So even if we may have a profit in the home, because we have depreciation, which is an expense that you can take. Depreciation is basically saying the property, because of its use and wear and tear, it's gone down, and you get to deduct a line item called depreciation on your taxes. So even though we may have a profit in our pockets, when you count in depreciation, it could allow us to have a loss. We like losses, fake losses, or phantom losses from depreciation, because that reduces our overall tax burden. So real estate can be good in both of those ways, depending on how much you're receiving from your tenants, and then depreciation. So you could really have phantom losses that can offset some other income for you. The other thing about having real estate, especially in other states, if you have it in another state, then that travel is now deductible because you have to go and see your properties. So if you live in one place and maybe your family is in another state, or if you have a house in that state, then those trips, if you take airline, rental car, when you eat meals there, a lot of that can be a deduction for you. And that's another great way to leverage real estate. So we talked about interest and dividend and capital gains as a stream of income. Also, you have royalties. Another good idea, if you want to talk about royalty income, would be if you create a course. And I have a course that I'm creating. Now that could be royalty income if I were to license that product to someone else, because then it's just money coming in and I don't have to do any work on it. That could be royalty income. Also, because I work with entertainers, they receive royalty income from writing different songs, or if they're doing music for the songs, the others are using that, that's royalty income. Also, income from your business. And when I talk about income from your business, I'm not talking about you paying yourself a salary, because ordinary income from W-2 wages is also a stream of income. So you may pay yourself payroll, that's a stream of income. But what I'm talking about is a business owner, you have profits in your business that can flow to you. That's a stream of income. So millionaires have lots of streams of income, or they may just have 4 streams, but still the ability to have various ways to make money and to grow your wealth is what is important.